A mixed reaction from the markets as lockdown restrictions are being eased throughout the world and the economy is getting back into action. To get analysis of this, we have Levant Gopal, Director at Africa Merchant, with us via Skype. Thank you so very much for joining us, sir, here on SABC News.
Good afternoon, Flo, and to all of your viewers. I must say we've seen some very volatile markets in these past few days. We saw the Dow Jones and a number of U.S. indices move to record high territory. The NASDAQ, which is largely the electronic or the, shall we say, the IT aspect of the companies listed on the market, went to record highs. Yesterday, of course, there was a reversal. What we've noticed is a massive climb in terms of a second wave of COVID cases in the US, as a number of companies that opened their doors in the last 10 to 15 trading days. You've seen the virus spread, and reports coming out yesterday created something of a shockwave in markets. The Dow Jones had collapsed by more than 5%, closing well past 1,800 points lower. And this spelled, of course, huge selling action across different segments of the market. It seems from reports from the U.S. Federal Reserve Chair that there is a concern about jobs. There is a genuine concern that whilst markets had been moving into higher territory, they had not been registering the massive job loss that is likely to be a wave of this COVID-19 spread.
Mr. Gopal, I know that my colleague, my business anchor, Colin, was concerned about this perhaps being the beginning of a bear market. Would you say that?
So this was a concern that we've had already for a few weeks now. The moment COVID-19 became a massive issue for the world, and a number of companies and individuals started being affected financially, you saw markets register concern and fall lower. A number of players indicating that the movement of goods and services being slower is likely to create something of a bear market. And we're also in the throes of lower consumer demand. As less people go out there and spend money, more people are unemployed and therefore have less money to spend. It is very likely that we can see a continued period of slow activity in the global economy. And when people talk about a bear market, it really means a continued period of low territory in financial markets. That is to say, the companies listed on these markets not performing with high profit levels. It is very possible that as the full impact of COVID-19 comes into effect, there's a very high likelihood that we can see continued losses amongst different companies for at least 24 months. And this is something many economists are in agreement about. So that may spell a short bear market for about 24 months.
Yeah. Now, of course, we saw, especially, during the sort of higher sort of lockdown periods, the harder lockdown, obviously people needing petroleum a lot less than what was generally expected. Based on that, is Sasol's rise sustainable?
So what we've noticed is Sasol has come under enormous pressure. They've had a fair amount of transaction activity in the US. They've invested heavily in the Lake Charles project. What you would have seen is because of the losses as a consequence of that US investment, the Sasol share price had collapsed a few weeks ago. A number of players were hopeful to see something of a turnaround for Sasol, and the rise has been very welcomed. You saw it move down into extreme low territories in the teens and then rise up to almost 180 Rand a few days ago.
Yeah.
Of course, there is still concern about the company from a profitability point of view. And this may have been enthusiastic buying, pushing the share price up. From the point of view of Sasol as a business, there are still concerns. It has been downgraded by almost all the rating agencies. So for Sasol to be able to turn the corner and show a profit may be some time away. I think that share price has screamed ahead of the potential earnings that come out of the business.
We've seen, of course, massive cuts in interest rates. Are we expecting to see more cuts?
I think the interest rate environment is something that has been pleasing for a number of us during this difficult time of COVID-19. With businesses closed, with all of us not sure about the next move financially, a lower interest rate has meant that there is something of an easing in terms of your repayments of debt. So car installments, home loan repayments, all of that has become easier because of this massive dip. And on average, somebody with a R1 million bond has seen something like a 25% dip in terms of their monthly repayment on a 20-year mortgage loan, just with the interest rate cuts that we've seen this year. Now, given the fact that we've cut so much, there is some debate about whether we can see further cuts in interest rates. The governor of the South African Reserve Bank has given us an indication to consider further cuts. He's also given us an indication that as much as 25 basis points, 0.25%, could be seen in the offing at the next meeting. And all of this is done to try and stimulate the South African economy during one of its bleakest times and, of course, lowest productivity periods. So the likelihood of another interest rate cut is almost certain through this calendar year, and that'll add to the relief that we've already got from the South African Reserve Bank.
All right. Thank you so very much, Laval Gopal, for your insightful views. We appreciate it very much here on SABC News. Thank you.